Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, March 20th, 5:08 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend going back to the O'Neill follow-through days on November 1st and 2nd. You can see the trend gauge over here. We've got the coveted 4 green arrows. Bit of improvement today. Leaders did their job after positive reaction to the Fed today, slid the yellow sub arrow a little further to the right, indicating follow-up strength. Also upgraded small caps from downtrend to neutral as they made the first close back above the 21-day moving average. All other, or the other 4 major indexes above their 21-day moving average already. And all 5 of the indexes above their medium-term 50-day moving average and long-term 200-day moving average. So what happened today? Stocks traded in a tight manner from the open going into the 2 o'clock FOMC interest rate decision, which was no change, which was expected. The FOMC statement, Powell's opening statement. Once those hit the tape at 2 o'clock, the market initially spiked higher, liking what it saw, obviously. A bit of a pullback after that. And then the presser started around 2:30, and stocks, let's just say Jay Powell said all the right things today, and he powered a broad rally. The reaction to what he had to say was a broad rally. All-time high close for the S&P 500, not the NASDAQ 100, not the QQQ, but the broad NASDAQ composite, and also for the Dow Jones Industrial Average, and a great performance for mid caps and small caps as well. Broad rally, positive reaction, inflection point, breakout above the prior 19-day consolidation on the S&P 500. You'll see that when we get to the charts momentarily, and gives us a good level for a reference point to trade against. Here are the final numbers. Big 7 up an average of 1.29%. RG8 even stronger, up 1.9%, led by ARK-K, which was up 3.5%, and FFTY, which is the IBD Leaders 50 Index, up 2.75%. So we like to see the participation from leaders. S&P 500 up 0.9%, equal weight S&P just a bit lower. NASDAQ 100 up 1.2%, equal weight up 1%. Dow up slightly more than 1%. Mid caps up 1.36. Russell 2000 small caps up 1.9. Global 60/40 up 0.7. In-house GROTECTION up 0.94%. Let's get to the charts. They look better after today. And we'll talk about what we did and what we're looking at doing. Here to start with the NASDAQ 100. We've been talking about how it's been lagging on a relative basis, and we had this downtrend line that we drew, declining tops trend line, along the recent lower highs that it's been making. And this was part of the impetus for saying that the market was correcting, because while this was making lower highs, the S&P 500 continued to make higher highs. But you see the wedge pop breakout here above the top of this declining tops trend line, and a little bit higher after hours, as well as Micron reported a big or a beat and a raise, and that's powering semiconductors higher. So see, now we just watch and see if we get through, get more power to the what it was initiated today with the reaction to Jay Powell. This is the first time in a long time. Let me get to the S&P 500. Normally what you see, go to a 5-minute chart here. Normally what you see is moves up and below where we are, trying to shake out the bulls and the bears, trying to collect all the stops. But we immediately tested that pivot, which is where we were right at 2 o'clock, and then powering higher. Little fade going into the close, but a strong last 10 minutes, taking us near highs of the day. Very positive reaction, and now You see I added an inflection point arrow here, as this is a clear breakout above this 19-day consolidation that we've been having, and it's a good level to trade against. Let's bring up a 30-minute chart here. Here was the initial gap up back on February 22nd, and here was the failed breakout on Friday the 8th. We tried to test that level several times, couldn't get above it until after Powell's press conference. So there's your breakout. Very common to retest a pivot. Happens about 50% of the time on breakouts. We'll see if that happens. But it gives us a great level to trade against. The 8-day moving average, that's the purple line, will come into the top of that by tomorrow. And even better, the 21-day moving average comes into the middle range of this middle part of this trading range that we've been talking about. This is the 21-day coming up into this tomorrow. So there's really two ranges, an upper and a lower, with the breakout, and we tested it several times. Call it around this level, but you can see the 21-day moving average, which we use place a lot of emphasis on that as our short-term moving average. But nice breakout, nice level to trade against. And any stocks that you own or buy should not break today's lows, or unless the market is already doing it, then they're staying in sync with the market. But definite inflection point today, and we'll see what tomorrow brings. We, of course, will be reviewing charts feverishly overnight to rank our adds, see if we want to add to things that we already have or initiate new positions. The only thing we did today was add to our SSO position. That's the second add on that this week. Nice low risk entry traded against the 8-day exponential moving average, which will be up near that breakout level, as I mentioned. Here's the Dow Jones Industrial Average with a breakout as well. Same situation applies here. Dow had been lagging for a while, but going sideways now on a relative basis over the last 2 weeks. On to mid cap. Failed breakout, just like with the S&P 500, pulled back, held the 21, and new closing high here as well. Not all-time high, but closing high. Very good participation there. And small caps with a big move up, blasting after 4 days of a tight consolidation under the 21-day moving average, blasting up through the 21. It's still within 1 ATR of the 21. So a normal pullback tomorrow could bring it all the way back to the 21. We don't make predictions, as you know, but we have very clear levels to trade against as well. Note the failed breakout here, which that failed breakout was on all of the indexes, not quite there yet, but up at the top of the range and reclaiming the 21-day moving average. So good stuff there. The VIX was lower as expected, with the market being higher, breaking below. You like to see when the market breaks out that the VIX breaks below, but this is still making higher lows. The VIX could break even lower. I mean, the low is 1181 here. Lower VIX, lower volatility, higher S&P 500 is the normal inverse correlation that we see. More help today. We've been talking about the strength of the dollar, but the dollar had an outside negative reversal today. So the 1, 2, 3, 4 prior strong days in the dollar, especially yesterday's breakout, gave it up back below the 200-day, the 21-day, and the 50-day moving average on the dollar. So good stuff there. And if the dollar was down, we had a very nice wedge pop also on gold, which had been pulling back after a strong run. GDX, we stopped on half of Nugget yesterday. We'll be looking to re-add to that as that screamed back. Look where it bounced right at the 21-day moving average as that screamed higher, up over 4.1% on the day. Silver as well, up 2%. And Bitcoin, which was weak overnight, weak this morning, bullish engulfing there too, back above the 21-day moving average. On to bonds. Bonds were mixed today. The longer rate, the TLT, the price down, meaning the yield higher, but just slightly higher. Broad bond index up 0.18%, which means on average yields down slightly. Here's the TLT. You can see down slightly. Bond pits close at 3 o'clock, so this is still showing up at 0.32% on the 30-year, and the 10-year down 0.5%. That's our inter-asset correlation. Here's the tail of the tape. There's some good stuff here. Now stochastics, all 5 positive, so let's get rid of that. I'm not going to assess the RG8, but I have a sense that they all hooked up as well. We'll see what the NASI RSI does when that updates. Dollar stopped the negative upward motion today. We'll be taking a look at that over the next couple of days to see if that continues and to see what happens with rates, as the reaction was muted and mixed today on interest rates. We also get updated sentiment data tomorrow. This has been a red flag, this NAAIM. Anytime this goes above 100, it has coincided with recent tops in the market, but this is a secondary indicator. We don't make decisions based on secondary indicators. It's just something that we file away for reference. You know, like I said, don't make decisions on it. It is a bit of a red flag, but hey, the price and volume today gave us what we wanted to see. So what did Jay Powell say? Well, he reiterated 3 cuts this year. That was the first good thing. They also raised their GDP forecast, which indicated that they're expecting a soft landing. And somebody asked him a question during the presser, and he said he wouldn't hesitate to cut even if the strong job numbers continue. The market liked a lot of the things he said. He also said they're slowing the tapering of their balance sheet. And add it all up, dollar down, stocks higher, just what the bulls want to see. So the day count, breaking out of this 19-day consolidation, 1 is the new day count. Third close above the 8-day exponential moving average on the S&P, 50 days above the 21. Kind of hard to believe, but a clean breakout. Can't argue with it. The price is the price. The chart is the chart. 93 out of 94 days above the 21 as well. Sectors, 10 out of 11 of the spider sectors higher. Regional banks higher. All banks higher, actually. ITB, that's builders higher. Gold, and silver stocks. Bonds mixed. On the downside, the dollar. XLV medical, and USO, the price of oil, even though oil stocks were higher. The only change we did is to add again to SSO, taking our adjusted beta up to 1.2. You can see the 7 positions that we still have. We'll be looking for low risk adds into that, or increasing our number of holdings as long as the positive reaction continues. And the bottom line on the day, Powell said all the right things, and stocks ended up broadly higher, 52.25. The closing number. Let's take a look at a couple of charts. Let's start off with Micron, up after hours by 13%. This is a 20-year breakout. Let's look at a monthly chart on this. It doesn't even stretch it out a little bit. Look at this. Back into 2000 was the last time we were at these levels. We approached these levels back here in 2021, and breaking above there after hours. And that is a benefit to semiconductors. SOX is up a little more than 1% after hours. So let's do a portfolio check. We had some hedges on in taxable accounts. We took that off on NVIDIA today. And inside, okay, Nugget. We trimmed half of this yesterday on weakness. I already showed that chart. Back above the key moving averages and back near the high of the base. We're looking for some follow-through strength on that. Now our positions, Uber, breaking back above the 21-day moving average. And this is a familiar pattern. We've seen a lot of stocks come down and hold the 50-day moving average or the 10-week. I used AMD yesterday as an example, which made a lower low today, but with the strength, even though it closed lower, back above the 50-day moving average and up another % after hours. Let's see what else we got. I showed Bitcoin. Weatherford, our oil stocks continue to act well, a higher high close for Weatherford. Also, copper, positive reaction, higher high for our FCX position. Nutanix, weak yesterday, weak early, but reclaimed the 21-day moving average by the close. Low risk entry add here. CrowdStrike also showing some strength, up nearly 2%, regaining the 21-day moving average and bouncing off the 50-day. Did I hit everything? Lilly up just barely, positive. Let's take a look at some other names. Coin with a strong day, bouncing off the 21-day yesterday. SMCI negative on the day, uh, but it's still recovering from this hangover of the secondary offering that it has and is in the process of pricing. Dell continuing to power off of the 21-day moving average, offering a low risk, attractive entry. ARM, chip design company, regaining the 21-day moving average. Spotify, regaining the 21-day moving average. Are you seeing a theme here? Kava continues to be one of the strongest stocks in the market. Obviously, your big stallions are going to be the ones that are making all-time highs, but if they're extended, you've got to look for a reasonable entry point. A reasonable entry point on this would have been the pullback to the 21 over the last couple of days. Excuse me. Now it's extended, but other stocks that were prior leaders reinforcing their strength today with their moves and their bounces off of either horizontal support or key moving averages. Uh, let's see, the gap, one of the strongest stocks in the market, price and volume combination, continuing to power. It's now got power from the pivot, up more than 20% in less than 2 weeks from a breakout from this flat base. That's going to wrap it. Thanks for the people. Yesterday, I brought up two charts that explained what we do and also our comparison to other advisors. A couple of people added on some things that they said we should make sure that we focus on, and we're updating all our documentation, going to get the website updated, and going to be making it clear what we do and what we offer here for people that are interested in our services. And basically, in a nutshell, GROTECTION has a dual mandate. We grow assets during uptrends, and that uptrend kicked into another gear today, as long as that holds, and protect them during downtrends, such as the pullback late last year and the 2022 bear market. As always, we'd like to hear from you. You can email me, don@revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. And with that, I will wrap up the video for March 20th, inflection point day, breakout in the S&P. And just the facts here at Revere. We've been talking about the recent pullback. We pulled in the reins a little bit, but the market spoke today. If it follows up on that strength, you know what we'll be doing, and that is not arguing with the market, as the bears are pretty much out of excuses at this point. That'll wrap it for Wednesday, March 20th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.